Well, hello Mavericks. Let's get going on our candlestick pattern. Now today is going to be what I think is probably the most common candlestick pattern. It's one of the first ones I learned, which is the Doji. Now I'm going to take this a step further because we like to go to Thomas Bukowski and take a look at some different statistics when it comes to specific patterns. However, I got to give it its fair shake because there are many different types of dojis. I went ahead and found the most common, a northern and a southern doji pattern. One is going to be very specific to a continuation of a move. The other is going to be what I found the doji to be useful, the most useful for is a reversal in a pattern. So, like I say, let's go to the Bukowski breakdown of the northern doji. Now, guys, theoretical performance of a northern doji is a bearish reversal. Usually, this doji will appear after a move to the upside and signal an imbalance between buyers into sellers and move it lower. However, based on the 100 trades used, or I should say analyzed by Bukowski, he found out that 51% of the time, this signal wasn't a reversal, but more of a continuation. So in Northern Doji, a chart going upward, finding a doji had 51% of the time, it would continue higher. Now what's interesting about this, it was so frequent that it is in not almost the top 5, definitely deeper into the top 10 out of the 103. So what do we know about the consistency of a trade? Or I should say of a pattern versus its frequency? Well, it gives a lot of false signals. So the overall performance rank is going to be low, 83 out of 103 on this. Its best percentage meeting price target was 88% of the time. Once again, folks, in a bull market with an up breakout. So a continuation move is where this seemed to have its best meeting its target statistics. Pretty interesting, right? The best average move in 10 days, 3.17%. Somewhere in the 6% range, 5% range, even higher than that, would be considered a healthy or a strong pattern. This one is pretty weak when it comes to the 103 that Bukowski measures and follows. So in the bull market, once again with an uptrend, this is the northern doji. Funny, right? It's not a reversal signal to the bear side. It's statistically better as a continuation. I've got an example coming up here in a minute. So the best 10-day performance rank, 53 out of the 103. That's actually a little bit better than I'd give it. And the reason being is because it doesn't have that average move in the 10 days, so its performance is going to lack a little bit. Plus, the frequency of this pattern keeps it from being super special. So what does it look like? Well, it's pretty straightforward, guys. We've just got a bullish move into that northern doji or a reversal signal, and instead of it coming back down, it confirms to the upside. Once again, guys, I really need to tell you that is 51% of the time. 51, not 60, not 70. It is a coin flip. So dojis are going to be a little bit more art than technical. And what I found here, we're going to get to the southern doji in a second, that they are both good for reversal signals if that signal appears at resistance, support, or has extension going into it. And I'll elaborate as we get to the example in a little bit. First of all, let's break down the southern doji. Now this is a pattern that's moving lower, and the doji occurs at the bottom with a bullish reversal, meaning it's hit a bottom point and it's going to reverse to the bull side. Now, unlike the northern doji, the tested performance of the southern doji actually did reverse 52% of the time. Once again, the previous one was 51%. This isn't much better at 52% of the time. These are coin flips. So we're really going to put emphasis on how it got there, meaning the preceding trend or candles to get to the point, and if that reversal or these dojis occurred at any sort of significant level, support, resistance, moving averages, things of that nature. Frequency rank, 8th. The northern was 6th. These are still in the top 10. These happen super often. You'll love this example that's coming up, guys, because I've got 3, 4, 5 dojis in a row. And when you string dojis together, they don't really give us too much of a signal at all. Not very helpful. So this overall performance ranks at 78 out of 103. It's on the lower end as well. Not as low, I should say, as the northern doji, but still not even in the top 25. Best percentage, meaning price target, 90% in the bull market with an up breakout. Now this, I took it as a bullish move to the upside with a bull pullback and then a break to the upside 90% of the time, reaching its target. Best average move in 10 days, 3.51%, so it's a little better than the Northern Doji, 3.17 versus this 3.51, but still not knocking it out of the park when it comes to average move in 10 days. Interesting enough, bear market with an up breakout. So a bearish trend with a bear rally, I guess would be the best way to note that. So we're coming down, have a doji, and then we have that 3.5% move to the upside, and then maybe it rolls back over to continue a bearish trend. So bear market, up breakout. But it's still showing that it does bounce after a move to the downside. So it is a bull move overall. Best 10-day performance ranks 50, a little bit better, right in the middle there, because of the bear market up breakout, or meaning when this does set, it's Southern Doji in a southern move, right, a down move. It has a pretty good performance rank, as at least retracing before it rolls over, or maybe continues to the upside. So what does it look like? Kind of what you'd expect a doji to do. Now, I wanted the Northern to be inverse of this, meaning up candles, doji, and a confirmation to the red side. However, that happens 51%, or I should say 49% of the time, where this will happen 52% of the time. So, moving down, bearish candles. My 2 cents on this, folks, the more bearish candles to a support level or a moving average or something that can be measured, the better the probability of this doji being confirmed with a candle to the upside. So what is the confirmation on these? Exactly what you'd expect. On the Northern Doji, it's an uptrending chart, bullish continuation 51% of the time. But Northern Dojis can confirm to the downside. We could trade them. We could trade them as bull pullbacks, right? But for using the Bulkowski percentages, we'll look for the bullish continuation. Confirmation is above the doji high, so we need to see a candle trading above the shadow of that doji, and it's a very frequent pattern with little rise. Keep in mind, 3.5%, hey, that's enough for me to make a trade, or in the case of the Northern here, 3.17%, that's enough for me to make a trade, but this isn't something that I would expect to get into and keep it 2-3 weeks, depending on the time frame you're trading, if we're trading a daily chart. Doesn't mean that it can't be the confirmation of a move that could continue without some consolidation or pullback, but the initial move off of the doji is going to be pretty short-lived and with very little rise. Moving to the Southern, exact same thing, just to the downside. Downtrending chart is where you want to look for these after a bearish move lower or an extension to the downside. We'll take a look here because I want to see support resistance levels to help. Confirming above the doji high. So once again, that doji is going to set a high and a low. In this case, we want to play it back up to the upside. So we need a candlestick to get above the high of that candle. Also very frequent. They happen all the time. Pattern with little rise. So just make sure that you've got a little bit of a target. Short-lived. Don't expect too much. In this case, it was 3.5, just over 3.5%. Is its best. All right, so let's jump out and take a look at an example that I have, and we'll go from there. So here is a nice little chart. You might see some dojis throughout this chart even before I start moving forward, and most of them haven't really done anything. That's why it's kind of important that we get an extension to the upside or the downside, or revisit support resistance levels before the doji really means anything. So keep that in mind. We talk a lot about this here at Maverick, right? We want to make sure that we've got a pattern, uptrend, support, resistance, things of that nature. Then we can start implementing some of these patterns. And this is a difficult one because it's so frequent. So I'm going to move ahead a couple of candles. Now we have a move to the upside here, and we get our first doji. That's an absolute doji. Now, is it enough to confirm 51% of the time that this is a Northern Doji, 49% of the time this is a doji that shows reversal? So I guess we're just going to leave it up to the next candlestick. And it looks like we got ourselves a continuation. So if we were to play this trade, we would expect it to move just a little higher, not very long. Looks like a little bit of a hiccup, but it did extend a little bit. Let's get going here, and it looks like it's still moving until we run into what? Another doji. Now, folks, does this doji mean anything? Well, depending on where we came from, I can see that we could actually implement this at that pivot point back here where we started and extend it up and say, okay, we're pretty extended. We should expect a reversal signal or 51% of the time continuation. So we got a candle that did not trade below or above the doji's higher low. So we've got nothing. Okay. Now we have traded below that doji's low. Let's see if we can continue lower. Look at here, folks. It's another doji. I'm going to see if this pattern goes a little lower. Oh, there we go. Inside day, getting a little choppy here. That's kind of great. Here's another doji with some long shadows. Let's see which way we go with this. Oh, looks like we're just going to continue lower. Gapping down. Let's find another one. Oh, here's something interesting. We've got ourselves a gap. It looks like it based and it's moving back upward. Now, what would be interesting is if we could see a doji develop here in the next couple of days. Boom. There we go. Okay, now we've got something to go off of. A little bit of gap strategy, right, folks? We've got classes on that. We can talk about that down the road. But we do have a significant little doji. Now, this would be something I would expect to roll over just because it's downtrending. It had to move to the upside. So I would be leaning towards, this is a northern doji pattern, but I'd be leaning towards the 49% of the time that it actually does reverse trend. Let's see if I'm right or wrong. Okay, well, that was obvious. A little bit of a gap down, but yeah, it absolutely confirmed and fell apart pretty aggressively. Let's move forward and take a look at maybe one or two more. Guys, it's funny. I really didn't prepare this chart too much because they happen so frequently. Now, this is a gravestone doji, right? Very interesting. Usually a sign of reversal to the downside, but it's a doji nonetheless. Let's see if it's going to continue or fall apart. There's confirmation because we have a candle that traded below the low of the doji. Oh, look at that. Now it moved. That's short-lived. It could turn at any time. And it looks like it's about, oh, there it goes. So that confirmed for a little bit. If we would have played it to the bear side, it would have worked. Let's shoot for one more. Oh, look at this big run. Okay, here we go. Now we've got a big surge to the upside. We've got a doji. Now this correlates with the resistance level that we saw previously, didn't we? So 51% of the time, the northern doji continues up high. 49% of the time, it reverses. Let's see where it confirms first. Upside. Okay, 51% of the time, it did confirm to the upside. Let's see how far it goes after confirmation. Okay, a little higher, gapped, oh, slipping, oh, nope, it's holding on. Okay, so in that situation, it worked out pretty good. All right, guys, I think you get the gist of it. That's kind of what I want to do with these. You can go out and play with some of these back testing charts, things of that nature, and write down how many times it confirms, how many times it's a northern versus a reversal signal or continuation, things of that nature. So let's do a quick review here and we'll set you free. So these patterns happen very frequently, ranked 8th and 6th. The top 10 out of 103 patterns is these dojis. And we have a southern doji and a northern doji. Now I'm not going to ruin any surprises, folks, but if you get on the Bulkowski website, there are handfuls of different types of doji patterns. You heard me say gravestone out there, didn't you? Well, there's dragonfly dojis and all sorts of fun stuff like that. I'm just doing your very basic reversal signal doji or continuation. So the patterns rank low in performance because they are so frequent. And they've got that 51 to 52% performance. It's tough. It is definitely a coin flip. It could go either up or down. So what do? I understand that it's a short rise, and after confirmation is where I'm going to get the direction. So I don't really need to have to see that doji and throw out, okay, it's going to go up or down. I usually wait to see if that doji is confirmed. Sometimes it's confirmed to the upside with the northern doji and it will continue. Or it might flip over and continue to confirm to the downside and actually reverse. A lot of that is dependent on how it gets there and where it develops. Is it at a support level, resistance, moving averages, things of that nature. All right, guys, a fun pattern. One of the first I learned, but probably one that has the most art to it, more so than technical. It's got to be setting up at a good technical point, but you got to make sure that it confirms in one direction, and then you got to pull the trigger there. All right, folks, thanks for joining me for this pattern. Look forward to seeing you on the next. Bye, everyone.